Cruise line stocks have been absolutely rocked here in the last few months. Many of them are down 80% or more in just 1 month. So let's discuss these companies today. Let's discuss the big three, which is Royal Caribbean, Carnival Cruise Lines, and Norwegian Cruise Lines. And let's see, based on the financials here and where the prices are at right now, if these companies are a good buy. They may be presenting some incredible opportunity here for some pretty big gains over the long term. So we'll discuss all of that in today's video. And of course, I'm also going to discuss what I plan to do with my personal position in one of these stocks, which I'll save for later on in the video. All I ask, guys, and you guys have been incredible lately with the support, is just to drop a like on this video because it helps promote it to other new viewers and it helps grow our community as well. So thank you for that. Just drop a like. It's all I ask for, and I truly appreciate it. So let's start off really high level here and go over the risks associated with this industry and kind of all the bad news really surrounding it, which has resulted in these stock prices plummeting. The main issue, of course, is that the known problem in the world has pretty much affected these cruise lines directly, because there have been a few cases specifically on these cruises which have resulted in these boats having to dock and all passengers forced to quarantine there for 14 days. Many of them ended up getting sick, and this sent waves out to anyone else who was considering going on a cruise. Who wants to be forced and be stuck on a cruise for 14 days, docked, and locked in your room? It sounds like a total nightmare, and as a result, the industry not only saw a slew of cancellations, but new bookings pretty much plummeted as well. As a result, a lot of these ships are now docked, they're not really operating anymore, but these businesses still have to pay a lot of their expenses regardless. Of course, the two biggest expenses I can think right off the bat is their employees that they'd have to pay if they want to maintain them, and of course their debt payments, which some of these do have some big debts, which we'll talk about soon. And of course, I think based on everything that's going on in the world, that there's going to be a lot of lingering effects and people are not going to feel comfortable going on a cruise anytime soon. It's probably going to take, at least in my opinion, about 2 to 3 years for people to actually feel comfortable to go back on cruises and kind of forget that this whole thing ever happened. So I don't think that this industry is going to recover as quickly as some may be expecting. So I fully expect the revenue numbers, the earnings, all of that to be pretty poor here for these companies in the next few years. Totally expected by me, and if they do beat my expectations, that'd be great for the industry and great for shareholders. But from what I see right now, this could actually put a lot of pressure on some of these companies and could potentially result in massive layoffs and, in worst case scenario, possibly even bankruptcy. So it's clear that there's tons of risk here in this industry with these stocks, but with them being down over 80%, there's a lot of you out there that are buying them right now. So what I thought we'd do is compare the top three here like we discussed, Carnival, Norwegian, and Royal Caribbean, and kind of go over their fundamentals, kind of go over where these companies sit here today and where I see them in the future, and that'll give us a better idea as to what this investment could look like over the long term. So looking here, Carnival is the largest of the three by far with an $8 billion market cap. Royal Caribbean has around a $5 billion market cap, which makes it the second largest, and Norwegian Cruise Line is the smallest with around a $2 billion market cap. The alarming part here, though, is the number of employees that these companies have. Combined, they employ over 270,000 employees, but they are not all US employees, as these companies operate globally. Nonetheless, the issue right now affects everyone, everywhere in the world, so this can really hurt these companies and in turn their employees as well. And clearly, guys, the market has been pricing this in very aggressively as seen by their PEs. All of these companies are now under a 3 PE, and this is absolutely unheard of. Try to find any respectable business with a PE under 5, and it's very difficult. The market has pretty much decided these stocks are worthless and are going out of business. This is absolutely amazing to see, considering the amount of revenue and profits these companies brought in just last year. Now, I do understand for the next 3 to 5 years, things won't be the same, but still, this is a little extreme in my opinion. And here's a peek at their revenue growth, which for the last year was very strong. Both Royal Caribbean and Carnival posted double-digit growth last year, showing that they are growing businesses. Margins for these businesses are also extremely very healthy. And honestly, in good times, these are very well-run businesses that clearly can pull in a lot of good profits. Unfortunately, though, these companies have sold off so badly that even their last 5-year performance shows us between a -60% and -80% decline in their prices, which is absolutely mind-blowing returns for a profitable company. And the crazier part is that most of these losses have come in the last 30 days alone, which just shows us how extreme the fear in this industry is right now. Now, some investors have been buying into these stocks like Carnival Cruise over the last few months before this big issue, mainly for their high dividend. Here, looking at Carnival, it yields us almost a 17% dividend, and Royal Caribbean yields us an 11% dividend. And right away, this should raise a red flag to you that something may be off. Payout ratio based on this information looks fine, but this is using last year's results as a guideline. So this year, we're expecting results to be nowhere near as close, so that ratio is most likely not going to be sustainable. If you ask me, I think it's very likely and almost guaranteed that the dividends in these two companies get cut as they try to keep their companies afloat. No pun intended. And here are the results from the last year. Revenue was strong, profits were strong, and if you're evaluating these businesses based on last year's metrics and performance, they are extremely appealing companies. But in my opinion, that's kind of where the investment judgment comes in. You really have to decide if these businesses will see these sort of numbers again over the long term. I can tell you right now that this isn't happening for 2020 numbers, probably not even for 2021 or maybe even 2022, but maybe in 2025, like 5 years from now or so, we get past all of this and they post similar numbers as to 2019. So I mean, yeah, I think it's kind of expected at this point that in 2020, their earnings are going to be horrible, and investors have priced that in for the most part here. But is there anything else to be concerned about for these investments? Well, here's their balance sheet, and they are not looking good. Carnival has only $500 million in cash, but $230 million in short-term debt, which they can handle for now, but long-term, they owe nearly $10 billion. Next is Royal Caribbean with almost $250 million in cash, but $1.43 million in short-term debt, and this one could be in trouble depending on when that's due. This is of course on top of their $8 billion of long-term debt. Finally, we have Norwegian Cruise Lines here with $250 million in cash and no short-term debt, but over $6 billion in long-term debt. And just looking at this, I would say the riskiest here is Royal Caribbean, and then it's a toss-up between Norwegian or Carnival. I personally would go with Carnival between the two, and I did, which I'll cover in a minute. But it's the number one player, and I like to invest in number one players in industries. So I know I just threw a lot of numbers at you, but the bottom line is when it comes to their fundamentals, they have had great performance over the last few years, but their balance sheet as it stands today isn't the best looking. This just puts them at risk for possibly filing for a Chapter 11 bankruptcy here, maybe even Chapter 7 in the worst case. But more likely than not, we'll see some sort of bailout here from the government. But if they do go down the Chapter 11 route, then you can say pretty much bye-bye to any sort of shares that you have currently, because those are most likely going to go to zero as the company restructures. But that's of course the worst case scenario here for shareholders, so we'll have to wait and see how this plays out and how the government plans to help these companies. I know there's a lot of mixed results on if the government should help these companies out, because if I'm not mistaken, all of them are actually registered outside of the US, so they don't actually pay US taxes. So it isn't really fair for the government to bail them out with US taxpayer money. Anyways, that's for another debate. That's where it kind of gets political. We're not going to talk about that here. But that's just kind of where it stands right now with these companies. You may think it's a similar situation as to Boeing and the airline industry, but a lot of those companies actually are registered in the US, so they pay US taxes. So there's a little bit more leeway there, in my opinion, to help out those companies. Also, I think that the airlines are actually much more essential to economic success, whereas cruise lines are more leisure and they're not really necessary for economic success. Now, many of you guys know I did actually buy some Carnival Cruise before this whole wild ride down. So what have I done with that position since then? Nothing. I haven't added to it. I haven't even sold off any of it. I'm just holding. But as it stands today, I may actually consider cutting my losses in this position because I see a lot of better opportunities out there in other businesses which could potentially yield me much better returns over the long term. My fear with this industry is that the government isn't going to be as lenient with them with the bailout, and we may actually see shareholder equity being wiped out here. Maybe the government takes a stake in the company, and that's also not a very good situation for investors. These companies were doing just fine before this whole issue, but now that things have kind of escalated, these companies are really getting exposed here for their balance sheets, and they may struggle quite a bit here in the short term. And if this keeps going, it's going to be a much bigger issue in the long term as well. This is definitely a high risk play, especially at this point if you're starting to buy in. The potential upside is there, but for me who has a cost basis, I believe in the high 30s or low 40s, it doesn't really make sense for me to average down this position with the amount of risk that it currently holds. This actually draws a lot of comparisons to the airline industry, which I recently covered in another video. So if you're interested in that, check that out as well. And really, the bottom line is I'm not a fan of that industry either. I like Boeing from that industry because they're the main supplier and they kind of have a huge moat and they only have one other competitor. But I don't like any of the airlines specifically. And really, this whole situation has really exposed these companies and just shows how bad their balance sheets are with their huge debt loads. It doesn't really give me a lot of confidence to hold these over the long term, which is why I am considering cutting this position. And if I do, I'll create a video on that for you guys, so don't worry about that. Sometimes you make bad investments, everyone makes bad investments, but you have to look at opportunities, and if there's a better opportunity out there, I will take my money out of Carnival and I will put it into that other opportunity. We'll have to wait and see how things go, but the best case scenario for investors right now is that the government loans them some money, that keeps them afloat for the next year or so, and things go back to normal next year and they start paying off that loan. This, in my opinion, will help shareholders immensely because they'll actually be able to hold some value in the stock, especially those who started buying the stock back in the 40s or 50s just a month or two ago. Guys, I'd love to hear your thoughts on this industry and if you hold any of these stocks. I know many of you hold either Royal Caribbean or Carnival Cruise. Let me know in the comment section down below if you are still holding these stocks or if you plan to cut these positions in the near term. Guys, thank you so much for sticking around. Remember, drop a like here to support this video. I truly appreciate that. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.